It's been a busy morning of private economic data. Getting some more. Let's get to Rick Santelli. Hey, Rick.
Yes, Carl, these are ISM manufacturing PMI September final reads, and we see sub 50 on the headline, 49.1, largely expected. 49.1 would be the lightest going back to, March of this year, when it was 49 even. If we look at prices paid, and of course, we'd rather have this go down and reflect less inflationary pressures, comes in at 61.9, sequentially lower than 63.7. 61.9 would be the lightest of the year outside of January, so the second lightest number of the year. That is indeed good news. 48.9 on new orders. It is sub 50, and it is less than expectations and sequentially lower than 51.4 in the rearview mirror. 48.9, how does it stack up? That would be the lightest going back to July when it was 47.1. And finally, employment. After a very weak ADP and questionable whether we'll get the big jobs report on Friday, comes in 45.3. Better than expected, obviously in contraction territory. Also higher than last month's 43.8. 45.3 would be the best level going back to May of this year when it was 46.8. Construction spending is due to be released now, but the shutdown is delaying that release, like many data points that may be affected by the shutdown. To summarize, interest rates are moving down rather robustly due to that weak ADP, which is magnified because we most likely aren't going to get the jobs number on Friday. Sarah, back to you.
Okay, thank you, Rick. Rick Santelli.